Are we in a recession? What if we are? Are you prepared? And if not, what can you do about it? Well, first question is, are we in a recession? And the first thing I would suggest you do is have a look at this video I did on the recession, whether we're in one or not. America have hit a technical recession, which is two quarters of negative growth. Powell from the Fed and other politicians in America have changed the definition, saying, well, they couldn't be in a recession because their jobs are so good, and because consumer spending is so good. I've went through all that in this video. I would suggest you have a look at it before you go through this one. So what are we? Are we in a recession? How can we tell? Well, most things are pointing that direction. And here's another thing that I've just come across today. So shout out, first of all, to goldsilver.com. I'm in no way affiliated whatsoever, but a lot of the charts that I'm using and the content I have here has come from information I've got through being on their newsletter, etc. I have bought gold and silver through them. It's stored in their Brinks locations in the US, but I have no affiliation to them. This video has nothing to do with them. It's simply I'm using quite a lot of their information, so shout out to them. First of all, here's one of their charts that they put up quite recently. And it actually just shows the relationship of the S&P 500 today versus back in 2008. So this gold line here, as you can see, that's the S&P index going from early 06 to early 08, which of course was on the lead up and into the recession, the global financial crisis. And the silver line here is the S&P index going from 2020 to 22. As you can see, the pattern is very, very similar. And you can see where it's come to right at this point. If it is to follow, then it would suggest that there's a very significant correction to come in the S&P over the next few months. So the stock market is following a suspiciously similar pattern that mirrors its performance just before the 08 financial meltdown. Is there a signal we're due for a crash? I personally think there's many indicators that suggest that a recession is either here or on the way. And it's for that reason, the question is, if we are you prepared? The World Bank recently warned the danger of stagflation is considerable today. And stagflation is actually worse than inflation. It's inflation on the move while the economy is stagnant, which of course means you have rising prices, but the economy is not in good shape. So not a good place to be. Most people have no idea if it's coming and wouldn't even know what to do even if they did. So no one knows for sure, of course. I certainly don't know. But, if you look at that previous video, I make the case that I believe the recession is very much here. Of course, that may not be correct. It's just an opinion. I'm certainly not a financial advisor. Before you go doing anything on a financial way, get your own independent financial advice. This is purely for entertainment purposes only. So no one can be sure. But October is right around the corner. And history shows that there's a notoriously terrible month for the stock markets. The Wall Street crash of 29 was in October. Black Monday in 87 in October. The dot-com implosion all started in October. Right now, there are many headwinds facing markets and the economy, and I go through that in that previous video. But we have that technical recession that I already mentioned. We have the worst inflation in over 40 years. That inflation isn't just in the US. We've double-digit inflation in the UK. Average inflation in Europe is just under, in around 9%. The lowest in most countries is around 6.5%. The highest over 20%. Many issues in both China and Japan economies. So, and I'm going to do more on those at a later date. There's the geopolitical tensions and conflict threatening commerce and freedom, of course, with what's going on in between Russia, Ukraine, and Europe. And of course, one of the worst energy crunches we've seen in decades, and of course, rising interest rates. So there's much, a lot of headwinds here that would suggest that a recession is almost unavoidable. If you agree that now is a challenging time to be an investor and you're considering making moves to shield your portfolio from risk, or wondering what opportunities for your new money lie ahead, well, what do you do? What do you do with your money if you're looking to invest, or maybe you've already invested in some things? Should you be getting out of those? What should you do from here? Well, what should you invest in? Should you be keeping your money in cash? Sell everything and just put it into cash? Well, inflation is going to eat into that in a significant way. Should you own stocks? Well, if we're in for a recession, it's highly likely the stock market is going to crash significantly. Should you own real estate? Well, first of all, if you don't have significant funds, hundreds of thousands or more, then real estate is very difficult to get into in the first place. But if you do own real estate, should you hold on to it, or should you look at other options? Should you own land? Should you own gold and silver? Obviously, that's what I'm going to be talking about today. And should you own crypto? Maybe you own some of all of these, maybe you own none. But what should you do from here if you're looking to invest? How do you decide? So how likely is a particular outcome? So if you think the economy is flying it and there's very little chance of a recession, then having your money in things like the stock market or maybe crypto, some in cash, whichever you think is reasonable in those circumstances. If the economy is going well, the market's going well, and you think that's likely to continue, well, then it's unlikely that you're going to be rushing into things like gold and silver. Though I'm going to make the case that no matter what, I believe you should have some allocation to gold and silver in your portfolio. Of course, your risk appetite is important. Many would see gold and silver as a safe bet, a risk-off type of asset. And of course, many would believe the likes of crypto, for example, would be very much the opposite end of that, which would be risk on. And so it depends on your risk appetite as to where you fit there. Do you want to have, the majority in a safe bet as it would be seen, or maybe you are looking for loads of risk? Maybe you're 100% in crypto, which, I actually have been in the past. It depends on the funds you're available. So, you might want real estate, but if you've only got, a few €100 or a few €1,000 to invest, it's a pretty difficult thing to get into traditional real estate. I'm going to be doing another video though on what some options might be there when it comes to real estate or land. And of course, then there's your existing portfolio. Maybe you have all your money at the moment in stocks and real estate. And you might feel, well, the economy is going well. You think it's going to continue doing well. And maybe you're happy enough just being in those two. I would suggest no matter what type of economy we're facing into, you should have a cross section of probably all of these, and not just exclusively these. There's many others, things like bonds and treasuries and all that you can consider too. So, and then it depends on what you think is coming. So if you think, for example, a recessionary time is coming, well, then most people would be inclined to go on risk-off assets, things like maybe land or maybe things like gold and silver. And I'm here to make the case that I think gold and silver is something that you should have no matter what outcome you're thinking is coming down the line. But then the percentage of it in your portfolio may be different depending on what you think is coming next. So how have precious metals, managed in recessionary times? If you believe there's recessionary times coming, well, then are precious metals an opportunity or a place you should have some of your funds? Since 1970, there has been 8 recessions in the US. Here's how gold has performed during each of those periods of negative economic growth. So you can see out of 8 of them there, in 6 of them, they were positive, one as high as 75% plus. And then you have a couple of negative ones, both less than 6%. So overall, they've done quite well. Gold, precious metals have done quite well during recessionary times. Of course, also note that after many of these recessions, the prices did extremely well thereafter. So in 6 of the 8 modern day recessions, the price of gold was higher at the end than when it began. The 2 declines were mild, with the 1981 occurring just after its biggest percentage gain in history. So I was bound to come back a little bit. This is encouraging for investors, gold and silver investors. Gold rose during the recession after 9/11, the great financial crisis, and the COVID recession. In other words, some of the worst modern day crises led to the higher gold prices. This makes sense when you think about it. A slowing economy usually increases fear amongst investors, and gold is a natural refuge when uncertainty strikes. A recent Bloomberg study also compared gold to the S&P 500 during each of the last 7 recessions. In their study, they examined the 2-year period around each recession, 12 months before it started to 12 months after it began, and found gold outperformed the S&P, the stock market, 500 by 50% on average. That's a huge difference. So history clearly shows gold can hedge a portfolio during recessions. In other words, it makes sense that if you believe there's a recession coming, that you should own some gold and silver along the way. Ronnie, who was a guest with Mike, that's Mike Maloney, who has a YouTube channel that I follow and is the CEO of the aforementioned goldsilver.com, which I certainly would suggest you follow both him and their channel, as much of this information has come from them, as I've previously mentioned. But Ronnie, who is an expert in this area, shows Mike that gold is outperforming nearly every other major currency, as well as other domestic stock markets around the globe. So it's not just the S&P, it's right across the board. While many safe blue chip stocks are down 50% or more, today gold is holding steady and even beginning to go on bull runs in places like Germany, Japan, and China. Many reasons, because in those areas they're not overly happy what's happening in the country and believe that their currency is being printed to oblivion and therefore reducing its value. Precious metals versus stock market crashes. A stock market crash can be hard on investment portfolios. Do precious metals help? There have been 10 stock market crashes in the past 50 years. We use the S&P 500 and look at each crash of 19% or more. The chart measures how each precious metal fared during the specific time period of each crash. But you can see here, specifically on gold and silver, here's the crashes, anything from 48%, 2020, 49, 56%, and so on. And here's how gold fared. On average, during those declines, when the average decline was 32%, during the same time, gold went up by 20%. This would mean if you had, I don't know, $1,000 on average over that time in the S&P, your money would be worth about 680 versus the 1,000 you started with, versus gold, if you had 1,000 in that would be worth about 119. So if you were in the S&P, that would have to go up by 75% just to get back to equaling where gold held during those times. So certainly gold and silver offer a real safe haven. And one more, this is Ronnie, again, shows Mike a chart from page 90 of the incremental latest research report on gold. They do a gold research paper revealing gold's price target. You may not be able to see this on here, but you can read it at the bottom. By the end of this year, the model predicts gold should reach 2,187 per ounce. And by the end of 2030, gold could reach 4,821 per ounce. That's a potential gain of more than double from today's prices. The point being there is, back to, should you own gold and silver? And a lot of that is dependent on, back to these questions here, what you believe is coming. So if you believe a recession is coming, well then, I think gold and silver is an obvious choice to have. But no matter what you believe is coming down the tracks, where you think, all is rosy and good in the world, well, then I still believe that having some gold and silver is a wise choice to have in your portfolio. If you think things are going to be steady and moving into the future, well, then maybe you might only have 1%, 2%, 5%, whatever you think is apt of your portfolio in gold or silver. If you think all is good in the world, why would you have any money in it? Well, I think it's just that safe haven risk. It's always worth having something in an asset in your portfolio that is likely to hold its value or potentially gain over the longer period. For example, if you look at gold here, this is a 1-year chart for gold and the price of gold. This is based on ounces. And you can see here that, it's gone from 1786 to, what is it there? 1746. So almost even over 12 months. You might go, okay, well, that hasn't really gained in value. What's the point in that? Well, the whole point of it is you have a massive correction or massive crash, then we've seen here that gold will hold its own or maybe be, do even better. And like I said, we've shown a 75% difference there compared to the S&P and other assets. What about over the longer period? And for me personally, investing in gold and silver, it's not a 6 months, 12 months thing. It's a minimum 5 years, but the idea would be holding it on the long term, unless I really needed to cash in on it, which I would hope I never have to do. But it's always there as that safe haven. What if we looked at it over a 5-year period? How has gold fared? Well, over a 5-year period, you can see here that it's actually done very well. Bearing in mind, I wouldn't be buying gold and silver with the idea of it going up many multiples. It's just there as that safe haven bet. Of course, if it goes up in value over the long period of time, which historically it shows it has, well, then even better. But it is really there as a hedge against the other high risk products. For example, I'm very much into cryptocurrency. Obviously, many would feel that's a very high risk product, and of course it is. And so having gold and silver as somewhat of a balance to your portfolio there makes absolute sense. But as you can see here, going back 5 years, it was 1,330. It's now, as we said, around 1,750. So there's a very significant gain there over the 5-year period for a product that you're just using as a hedge and a balance. And what if we go over 20 years? Over 20 years, even better, as you can see, again, went from 300 odd up to the 1750 we mentioned, which is, a 5 times plus multiple. So for a product that you're just holding long term as a safety, as a hedge to other assets, that's a very nice gain. What about silver? Has silver done as well? Well, if we just look at silver over the 5-year period, and again, this is based on ounces, you can see, okay, it hasn't, done usually well, and obviously it's fluctuated as you'd expect, but it's 1750 there, it's 1890 there, so it's climbed slightly over that 5-year period, but again, it's there purely as a hedge. The fact that it's gone up anything at all is a bonus. And if you go over a 20-year period, again, actually it's done very well. So you can see it's gone from sort of 460, let's call it 5, up to that 18. So again, over at 3 times. So for a product that's a hedge to what's out there, I think it makes a lot of sense. So how do you decide what you put in your portfolio? Of course, that's up to the individual and whatever advice you get from your financial advisor or from others. But again, it is down to what you think might be coming down the tracks. Again, if you think you're just using it as a hedge, and again, it depends on what else is your portfolio. You might have land and real estate, which you might feel are fairly safe assets, and then you're putting in a little bit of gold. Maybe you wouldn't need as much gold, particularly if you think what's coming down the tracks is quite safe. On the other hand, maybe your portfolio is very heavy on things like cryptocurrency or maybe some cash, which is certainly getting eaten into at the moment by inflation. Well, then you might be considering putting, a bigger chunk into gold and silver. Maybe it could be 10%, 15%, who knows? But then if you believe, for example, there's a recession coming down the tracks, which I certainly believe is now highly likely. Of course, there's nothing certain. Well, then I would personally be thinking, okay, well, if I have risk on assets like crypto and others, well, then I certainly want to have a much bigger chunk of my portfolio in what's considered for me a safer asset in gold and silver. So they're all the things to take into account, I guess, when you're looking at this and seeing what you should have. If you have no gold and silver, I would certainly be saying that I think it's a good idea to do that, not recommending it, do your own research. But certainly for me, I think it makes a lot of sense, no matter what you think the outcomes are coming down the tracks. And the percentage then depends on your portfolio, depends on your funds, depends on what you think is coming. And so from there you make up your own mind. So for me, this isn't quite a picture of my living room, but I do have one silver coin at home. But other than that, all is stored elsewhere. There's many places you can buy it from. Again, no affiliation or no links or nothing to do with goldsilver.com, but there's certainly one possibility where you can have it stored in the US. You can get delivered if you want, though don't recommend holding any of it at home. There's many other possibilities and places you can get, obviously, depending on where you are in the world. So, for example, I'm in Ireland and I have some stored in various continents, actually, through different brokers. But then you can get some, delivered if that's what you wish. And certainly it's probably good to have some physical, but obviously don't store it at home, store it somewhere where you can access, a storage facility nearby or whatever that you could ask it. If the world were to fall apart, and you can actually use it as actual money versus currency, which is getting printed into the oblivion and becoming worthless. So with that, I would say this: if you believe that the dollar is still going to be the reserve currency of the future, and they just can print and print and print, which is highly likely to happen again as they go, well, then the value of your dollar is ever decreasing. And so it's good to have a hedge to that. Alternatively, you might feel that maybe the dollar is not going to be the reserve currency of the future. And I did a video on that, which I think makes the case that maybe the dollar won't be the reserve currency going into the future. And that video, I believe, is certainly worth a watch. But if it's not, if you think that, whichever way you go, a new reserve currency, they have, the BRIC currencies, that's Brazil, Russia, India, China, South Africa, and other countries showing interest as well in creating their own reserve currency. They have already stated that they will be backing that with a basket of their own currencies, but also gold, silver, and their oil and gas reserves. So that in itself would require a huge reevaluation of both the value of gold and silver. upwards. So not only is gold and silver a good hedge, in the smaller possibility of there being a new reserve currency, or even the existing reserve currency having to go back to the gold and silver standard, where they actually have to back the coin, in both those cases, gold and silver would have to go up by many multiples. So for me, there's a lot of reasons to own gold and silver. I've tried to outline them today. Hopefully you found that video of some use, and we'll talk to you all soon.